Liebe Zuschauer, herzlich willkommen zu Inside Wall Street aus dem Studio der New York Stock Exchange. Mein Name ist Manuel Koch und bei mir ist heute eine Wall Street-Legende, Peter Tuchman von Quattro Securities, 27 Jahre schon hier an der Wall Street. Peter, thank you so much for joining us.
My pleasure.
Also, one of your names is Mr. Einstein. I don't know why, but maybe you know it.
I can't imagine why.
You're so smart.
You can all tell that for sure.
Peter, exactly 25 years ago, we saw the big crash here on Wall Street. You have been here. What changed during that time?
You know, I had just started. I started on Wall Street in 1985, and I was a clerk for Quattro Securities at the time, and on the floor here in New York. And you know, the whole temperament and the whole atmosphere on the floor was totally different. There was none of the technology that was around today. We had small little Quotron machines, and everything was being done on paper, and there were much fewer people. There was much fewer volume. But my memory of that day is fairly significant because I was a clerk, and I was running a small telephone wire to a retail desk. And all I remember was that stocks were just going down in large chunks. You know, I remember I was trading one particular stock called Digital Equipment, and it was a $155 stock, and by the end of the day it was trading at $80. Things were just careening down, you know, into a big hole, and there was a lot of fear and a lot of screaming. You know, that back then there was open outcry, so people were running around, and there was just... It was out of control. I have to admit, it was, you know, we've seen all this volatility in the last couple of years here on the floor, and we have these new handheld computers, and you have flash crashes and high frequency and whatnot. But I don't think the fear and the volatility could be matched from what happened on that day.
At the moment, what is important for your daily work? We see, like, the earnings season, we see economic data, the U.S. election, Europe crisis. What is important in your daily work?
Well, you know, I'm a day trader. I trade for hedge funds, and all that information goes into my day. You know, we don't trade hold positions for more than one day, usually a couple of hours. And in this marketplace, you know, we had last year the S&P in January was the same at the end of the year as it was in the beginning of the year. So you know, the way to make money in this kind of a crazy volatile market is to be a day trader. That's what I do, and in my opinion, that makes sense. Okay, and that's an art and that's a discipline. But so what's exciting for me as a trader is all the information you described. You know, earnings seasons tend to be exciting. The election is causing the market to go up and down on a daily basis. The news in Europe, the headlines, are causing great volatility in the marketplace. So, you know, what goes into a day in the market on the stock exchange today is fantastic. We have huge moves up and down, and stocks are moving quite volatile.
Are you expecting for the end of the year that the market is increasing?
You know what my sense is? I kind of think it is. You know, there's a lot of stuff going on. It seems like in the last couple of weeks we've sort of disengaged from the news in Europe. You know, and we've talked about this before. You know, there are times where every headline in Europe will cause the market to go up big and down big. And then there are times that the U.S. market disengages from that news and gets more involved in other things, depending on earnings season, election, and whatnot. You know, we're in the middle of earnings season right now. I think that people were anticipating they had lowered the guidance on a lot of earnings, and I think they lowered it so low they were anticipating bad earnings season. We haven't seen that really. I mean, IBM did come out with some, you know, the earnings beat, but the guidance was bad yesterday, and that caused quite a dislocation in the market. You know, IBM was down 11 yesterday. So you had the S&P was up because of tech and whatnot, but the Dow Jones was down. That was a strange dislocation. You know, from what I understand, and I listen to a lot of the economic pundits and a lot of the people on CNBC and the other stations around, and do a lot of reading.
And DAF, of course.
And of course DAF. But it seems that there seems to be a lot of money on the sidelines. I wouldn't know that. That's not my business. But it makes sense that people were looking, you know, for the last 3-4 months, people have been looking for this big sell-off. The market has been flatlining off the top. You know, a lot of stocks are at their 52-week high, and the S&P is at a high. And the trend in this year, I mean, the market has just gone from lower left to upper right, right? So, you know, people have been looking for some kind of a sell-off, some kind of profit taking. And a lot of people have been on the sidelines and waiting for this sell-off, especially into this earnings season. And it doesn't seem like they're getting it. We've seen two big up days. We had a small sell-off last week. We hit some resistance in the futures. 1425 level in the S&P, and we've bounced off it radically. Today's Thursday. We've had a big week. You know, we're up 250 points this week.
So, do you think the election is coming soon? Will this drive the markets also? I mean, there are the prejudices that the guys here are Republicans. Would you think a new president, Romney, would drive the market different?
You know what? It's hard to say. I stay out of politics. It's not really something I'm that interested in. I do listen to the floor. The floor tends to be a Republican. Wall Street tends to be Republican. And, you know, I look, the market has responded okay to Obama's few years. I mean, there was the bank bailout, and we had GM and whatnot, and so you know, although you know the Democrats feel that that it's a bit overregulated, the Republicans feel the Democrats have overregulated the marketplace, and Romney promises to pull some of that away, and so you know the feeling on the floor is that a Republican president will be positive for the market. I'm not sure if, you know, I don't really know. I mean, this is a pretty tight race. You know, do I think that if Obama is reelected, will that cause a sell-off in the market? I don't think so. Although a lot of people do. A lot of the big firms on the floor I spoke to actually yesterday were saying that this would cause a lot of problems in some of the proprietary funds, the Morgan Stanleys and Goldman Sachs, because of regulation, because of taxes. You know, that's the biggest change. That's the biggest difference in their policies as far as tax goes and Wall Street goes.
When you would be like a small investor, for example, in Germany, how would you make your strategy at the moment?
For the end of coming into the end of the year, I would be long the market. I really believe that you know, traditionally markets have rallied into the fourth quarter. As I said, seems like there's a lot of money on the sidelines. Hedge funds are underinvested, and I think the public is a little underinvested. There's been so much fear over what's going on in Europe, the election, and whatnot over the last few months. And as I said, people have been waiting for this sell-off that I think people have been holding in cash. So the market has performed quite well. So they are sitting around having underperformed. So they will have to jump on board.
Any special sectors you see going up?
You know what? I don't really look at it that way. I just look at the overall market, and I think that people are going to be jumping on board here. You know.
All right. Thank you so much, Peter Tuchman
My
von
pleasure.
Quattro Securities. Thank you for your time. Und Ihnen, liebe Zuschauer, vielen Dank fürs Zuschauen. Wir sehen uns dann in der kommenden Woche wieder bei Inside Wall Street.